This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are across Bloomberg platforms. I'm Carol Massar, along with Tim Stenivek. We're live here at Bloomberg headquarters in New York City. And we've got stocks once again under pressure due to a continued sell-off in the world's largest tech companies. That's happening. Also, you've got shares coming under some pressure as oil prices climbed. Again, the president talking about the war. Feels like, Tim, no end in sight.
Yeah, S&P 500 off its worst levels of the session. Interestingly enough, Carol, industrials are the worst performing sector in the S&P 500, down 2.6%. It's all really emanating from his commentary from the Oval Office earlier.
Yeah, he did say that the United States will resume attacking Iran very hard. Those were his words. We're going to get an update on the war. We're going to get an update on trading in just a moment. Also ahead this hour, we are, of course, on inflation watch. We did get a read this morning. Inflation here in the U.S. accelerating in the month of May to the fastest pace in more than 3 years due to the Iran war pushing up energy prices. We're going to tie a lot of things together in the next 60 minutes.
Yeah, on that and the latest out of the Middle East, Chris Kennedy is going to be joining us. He covers economic statecraft for Bloomberg Economics. He's going to help us tie it all together. He's going to join us from Washington, D.C.
Yeah, we're going to talk, too, about some of those primary races because there's a lot going on around the country.
Maine.
Yeah.
The state where I went to college.
Yeah.
The way life should be. That's what they say about Maine.
It is kind of beautiful, to say
Listen,
the least.
There's a bumper sticker up there. If you can't handle our winters, you don't deserve our summers. Okay? So that's all I'll say.
All right. Good to know. Hey, we're also going to get into what investors are doing with their money in real time. We're going to talk about that with the CEO at Wealthfront.
Also, a little bit on banking. Goldman CEO under scrutiny for standing by the bank's top lawyer. We're going to be talking about that a little later in our program, too.
Yeah, this is rather timely, considering the Wall Street Journal just reported, just crossing the Bloomberg, that the Department of Justice asks big banks about whether they debanked clients. So we got a lot to talk about. In the meantime, let's get you caught up on the market action on this Wednesday. Here is Charlie Todd.
All right, I thank you very much. Indeed, shares of J.P. Morgan Chase, they are down now by 0.1%. Bank of America up by 0.9%. That headline bears repeating, Carol and Tim. U.S. Justice Department has sent subpoenas to several of America's largest banks, including JPM and Bank of America, requesting information about whether they, quote, debank clients for political reasons. Also, some Middle Eastern headlines to pass along. Israeli Defense Minister Katz says the IDF is poised to strike Iran, quote, with great force. Katz says the Iran war is far from over. All of this with the Dow, the S&P, NASDAQ very much in the red amid a flare-up in geopolitical tensions. That has spurred a rally in oil. West Texas Intermediate crude very close to $91 a barrel, up now by 3%. Barrel of Brent, $93.93, up by 2.7%. Wall Street's also being rattled by a renewed sell-off in some of the world's largest tech companies. First of all, let's begin with the baseline. The S&P is 73.21 right now, down 64, down 0.9. NASDAQ is down 1.1%, while the NASDAQ 100 index is down 1.2%. And the SOX, the Philadelphia Stock Exchange's semiconductor index, it is down now by 2.2%. The VIX holding just above 21, the 10-year 4.54%, the 2-year 4.12%, and the 30-year 5.02%. Gold down 3.3%, 41.17 the ounce. And again, West Texas Intermediate crude bears repeating, WTI up by 3% right now, 90.81 a barrel. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, increased tensions in the Middle East, risk derailing intermittent indirect talks between Iran and the United States. That means a path to a deal allowing for the reopening of the Strait of Hormuz is clouded, stoking some concern over inflationary pressures that could make the Fed raise rates before the year is over. We're going to talk inflation, a deeper dive in just a few minutes. But right now, we want an update on this now more than 14-week-old war.
This as President Trump pledged to strike Iran again after accusing the country of delaying talks on an interim peace deal. It puts further stress on a fragile 2-month truce. He spoke earlier from the Oval Office.
We hit them hard yesterday, and we're going to hit them again hard today, in case you miss it, in case you don't turn on your television set. And we'll see what happens with the deal.
All right, let's get more on the U.S. war in Iran. Of course, that was President Trump earlier today. We also want to talk a little bit about the U.S. political backdrop following the latest round of primary races. With us is Chris Kennedy. He's economic statecraft lead for Bloomberg Economics. He's out there in our Bloomberg News D.C. bureau. Chris, good to have you here. Lots to get to on this Wednesday. Let's talk about the war. President Trump, first of all, saying Iran would, quote, pay the price for delaying negotiations for an interim peace deal after those renewed attacks overnight put further strain on really what's been a very, very fragile 2-month truce. So what does this mean in terms of U.S. actions? Does this war continue to drag on? What's next for the U.S.-initiated war? Because it keeps feeling like we're going to come to an end, but it just doesn't really happen.
Yeah, so I think the president is clearly frustrated with the pace of negotiations, the fact that they haven't been able to get to this sort of interim deal that would allow deeper technical negotiations over Iran's nuclear program to proceed. Our assessment is still that the actions over the past few days are not going to jeopardize what we're calling a ceasefire. Of course, it's a relatively warm ceasefire. We continue to see attacks from both sides. At the same time, I think what we've seen in terms of the actual strikes is that these have been quite calibrated on both sides to prevent a real, escalation that could, plunge us back into the sort of really hot conditions we saw before, back in March and early April.
So are you still calling this a ceasefire? Is the ceasefire actually holding?
We're calling it a protracted conflict, but low-level conflict. So I think it's hard to call something a ceasefire where you're seeing these sorts of strikes. But this is what we anticipated would continue to happen. I mean, the two sides are still very far apart on many different issues. But specifically what we're seeing now is Iran is really hardening its demands that both Israel stop its attacks on Lebanon and its campaign in Lebanon, but then also the question about the unfreezing of funds and sanctions and whether that's going to happen before we get to this, window of time where the deeper negotiations can happen.
What's the leverage that each?
I think.
Yeah, sorry, Chris. I don't mean to jump in. I'm sorry.
Go ahead.
What's the leverage that each side has?
Well, clearly, Iran is feeling very confident that they have the ability to, completely shut down shipping through the Strait of Hormuz at any point. We're hearing reports that there is some shipping going through. The president confirmed as much. The president, the U.S. seems to still be counting on economic pressure, potentially bringing Iran to the table. But clearly, the president is becoming frustrated with that. So I don't think that the points of leverage have really changed, but what we've seen is a hardening of positions.
All right. So on and upward, because I do feel like, markets seem to shrug off a lot of stuff. We sometimes certainly see reaction, but it does feel like there's a lot being shrugged off. I want to move on, and I want to talk about the political races and the primary races that are underway ahead of the upcoming midterms. War, inflation, all of this matters to voters. We know that. We've had some key races, Chris, in Maine, Nevada, South Carolina, North Dakota. Talk to us about this. How this is really kind of, I would assume, a vote, too, on the current administration's policies. What are these primary races revealing when it comes to what we are getting out of the White House?
Sure. So, looking at the South Carolina races yesterday, for instance, so we saw Lindsey Graham cruise to the general, won his primary. I'll note that he received less support than he did in 2020. He had the backing of the president, and then similarly, the president's preferred choice in the governor Republican primary also advanced. I think that tells us that despite the president's dropping approval ratings over the war, over the economy, he still really is such a powerful force when it comes to the Republican base, and that means these primary races that we're continuing to see play out over the last couple of months and into the summer. And so, South Carolina, that Senate race isn't going to be consequential for the balance of power following the November election, but it does show that the president is still important. Now, Maine is obviously a different story. Maine is an essential race for the Democrats to win. Graham Platner, if he beats Susan Collins, that puts the Democrats in a much better position to take control of the upper chamber in November. And I think this is a really risky situation. It shows a few different things. Number one, the Democrats don't really have that level of leadership at the national level. I'm repeating what many people have said, but we see an insurgent candidate, not particularly well vetted, getting through and advancing to the primary with a lot of support from the base and a lot of support from, across the board in Maine. I mean, it was a pretty substantial victory. Of course, Susan Collins faces major headwinds. The war is very unpopular. The economy's, falling. Trump is unpopular in Maine. But we don't know what's going to happen over the next couple of months. We've seen this trickle and then this deluge of bad news about Graham Platner. So a lot of things can happen. I think there's risks on both sides.
Yeah, it's noticeable given that Graham Platner has talked about, his narrative is really about affordability and making sure that Mainers. It seems like maybe Democrats, to a certain extent, have learned their lesson about messaging from the 2024 election. I don't know. Do you think that's true?
I do think that there is a very organized part of the Democratic Party that is very focused on this more populist, economic message, and that is, resonating with voters as we're seeing in these primaries. We have some additional primaries coming up. I'm looking very closely at Michigan, where we have a similar dynamic playing out. That primary is in early August. But it comes with risks because these are young candidates. They have a lot of views that diverge from the traditional Democratic Party views on things like Israel and touching on some of the hot button social issues, that were questionably popular in the 2024 election.
All right, going to leave it on that note. Hey, Chris, thank you so much. Yeah. Covered a lot of ground there. Chris Kennedy, economic statecraft lead for Bloomberg Economics in our DC News Bureau. He talked about kind of critical issues for voters. Inflation is certainly one of them, and we got a great read on that this morning, with U.S. inflation accelerating in May to the fastest pace in more than 3 years as the Iran war pushed up energy prices, outstripping Americans' pay gains. It all ties together, Tim.
We got Michael McKee with us. He's Bloomberg TV and radio international economics and policy correspondent. He joins us here in the studio. A few different numbers to go through, Mike, but we're reminded of what the president said from the Oval Office earlier. He called the inflation print, quote, great. Is it great?
It depends on how you want to look at it. It's the greatest increase in inflation on a year-over-year basis.
I don't think that's what he meant.
Well, he's the gift that keeps on giving because the Democrats just got to love this. He said, I love the inflation. Now, he went on to say that because when the war is over, it's going to drop like a rock. But I can imagine them just cutting that little bit out, and that goes into the campaign ads. Because the thing about it is, as you mentioned, Carol, inflation's running ahead of incomes. Average hourly earnings were up this month by 3.4%, but 4.2% for inflation. So you've got a real earnings, inflation-adjusted earnings, 0.7 below. And that's going to be felt at home. And it's going to be felt at the gas pump still, because even though prices have eased off a little bit, the gasoline prices were up 3.9% in May.
What you're so good is reminding us what kind of goes into this. I mean, how much of inflation is because of the higher energy prices? And is the president to some extent right that a lot of this will go away when this war ends? However, the caveat is we thought this was going to go away weeks ago, 2 weeks. And here we are,
months
many
ago, he
weeks
said
in.
2 weeks.
Yeah,
it would be over in 2 weeks.
Well, they told Anne-Marie Horder on Monday that 2 or 3 days. So you know, it's Groundhog Day, and until it ends, we can't know what's going to happen. But if it ends, we will see prices come back down again, but it'll take time. And there's disagreement about how long it will take. The general feeling is about a month to come down, to get enough oil in the system that we see prices sustainably come down. But there's also a feeling that until sometime next year, if at all, we won't get back to the $2.98 average that gas prices were before the war started.
Just in time for the summer and those drives.
Before we get to summer, we get to the first Fed meeting of Kevin Warsh. And unfortunately, Carol and I will be on a plane next Wednesday as the new president.
Which is kind of a bummer because we love tracking the Fed.
We will not be able to listen or watch what he says. It's like we're going to be in this vacuum for 5 hours.
Wi-Fi.
There is Wi-Fi, but there's not like the ability to stream.
Yeah.
I've checked already because this is like a very important
Can't we watch
meeting.
Bloomberg on the plane?
No live TV on the plane, Carol. I'm sorry.
You got to change airlines.
Yeah, maybe change airlines.
Exactly.
So, Mike, the question is what position does this put the new Fed chair in communicating to markets, but also communicating to the man who appointed him?
Everybody's asking that question, and I'm asking the question, well, what does Kevin do now that Donald Trump says he loves inflation? It's kind of the opposite marching orders.
Do you think he knew what he was saying?
I don't think...
Okay. That's not fair. That's not fair.
Who knows?
Okay.
But Warsh is, in some ways, this is a gift to Kevin Warsh, the inflation numbers today, because there's no way you can cut rates with inflation at these levels. So then the next question for Warsh is, when can you? How far down does inflation have to come? And we don't know what he's going to say, but it's going to be very difficult for him or anyone to make a case for cutting this year because inflation is still rising. Now, the good news for Warsh and company and the president is it looks like tariff inflation is starting to fall out of the numbers because core goods prices were down 0.1%. So that will be helpful unless the new tariffs he's going to put on in July create problems again. But it's going to take a while for gas prices to come down. Now, we saw an unusual drop in food prices, not a drop, but an unusually small rise, just 0.1%. And we saw beef prices actually fall. Well, what's happened since May? Screwworm. So now we're going to probably have food inflation again, and that's going to be hanging around. So it's going to be difficult for him to do anything. It's a question kind of what can he say to reassure people, let people know the Fed is on the job, but he's probably not going to be able to reassure Donald Trump that rate cuts are coming anytime soon.
Well, Mike, that other part of the mandate, the labor market seems to be doing well as of Friday, right? So is that, thank God for the Fed that they can do that? Because if the labor market was coming undone,
sure.
Inflationary pressures.
The worst situation
would
be inflation rising and the labor market collapsing because that would suggest that the economy is going to stall out.
Yeah.
And so this is a good news situation for them. Now, we're still waiting to see what happens with the economy and the war. Is there at some point demand destruction because people are paying too much for gasoline and therefore they don't have money to spend on other things?
I feel like, Tim, you and I have on market guests. And we will often sometimes either get someone who is like, this is all crazy, the AI spend, it's overdone, it's overheated, the valuations, even of like the upcoming SpaceX IPO, too much. And then there are others who are like, earnings are good, there's growth, the job market, what is the economic backdrop?
I don't want to say you're old, Carol, but you and I both remember the 1990s and how earnings were good.
If we're old like a fine wine, I'm good.
Earnings were good, and the outlook was great, and then, look what happened. So I don't know. I'm not qualified to comment on the AI or the SpaceX valuations. The economic backdrop is pretty good, and if it weren't for the war and it hadn't been for the tariffs, we wouldn't even be having these discussions. The Fed could probably still be looking to cut rates, but now people are saying, well, was the December cut a cut too far? Did they go too far given the situation that we're in?
Yeah,
it's true that they can't fix the oil problem. They can't raise rates and open the Strait of Hormuz. So it's a tough situation for them to be in. And of course, everybody's looking at them to solve the problem.
Well, speaking of solving problems in SpaceX, Carol.
Yes.
We might have Starlink internet on our flight next week. And if we have Starlink.
Well, I was supposed to have it on a flight recently.
Yeah, we had no internet on that flight.
And it was no bueno.
If we have Starlink, we can then access Bloomberg television.
That's what I was thinking.
But if we don't have Starlink, then
I'll send you a little signal. I'll tug at my ear. You guys know that I'm thinking of you.
All right.
No signals on Fed Day.
Michael McKee is probably the only guy who can call me old, and I still love him. Michael McKee, Bloomberg TV and Radio International Economics and Policy, CEO of Wealthfront, is next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, and the NASDAQ 100 index all trading lower right now. A flare-up in geopolitical tensions spurring a rally in oil. West Texas Intermediate crude advancing now by just about 2.7%, 90.55 a barrel. Barrel of Brent, 93.60. Brent crude up by 2.3%. Stocks lower, though, across the board. Tech hit hard again. Semis trading lower. S&P down 76 to 73.09. That is a drop of 1%. Dow Industrials down 656 on the Dow, a drop there of 1.3%. NASDAQ Composite Index also lower, down 1.3%. The Bloomberg Mag 7 Index trading down by 1.6%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down another 2.6%, with the VIX holding just above 21. 10-year at 4.54%, the 2-year 4.12%, and the 30-year 5.02%. Spot gold is down $141 the ounce to $41.11, a drop there of 3.5%, while West Texas Intermediate crude again trading higher by 2.6%, 90.50 a barrel. Super Micro computer shares are now plunging by 20%. Super Micro plans to raise $7 billion through a package of equity offerings to purchase the components needed to fulfill customers' orders for the company's AI servers. Again, Super Micro now down by 20.6%. Recapping, S&P down 79, down 1.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, Carol and Tim. That is a Bloomberg Business Flash.
All right, we'll come back to Charlie a little bit later on. Now, Wealthfront, it is one of the OGs when it comes to what was originally known as robo-advisors, getting its start off the great financial crisis back in 2008. I know folks don't always use that term as much, but more importantly is what they are up to and how the industry continues to evolve. Company, by the way, reported earnings last week. Stock traded down about 14% on the news. Those earnings on June 4th as the company just completed its first 6 months as a public company. We've got a great guest to talk about it all.
David Fortunato is CEO and president of the $1.3 billion market cap wealth management and financial solutions platform, Wealthfront Corporation. He joins us here in the Bloomberg Businessweek studio.
David, great to have you here. Let's start with nuts and bolts, the basics, earnings. You reported last week, stock was down about 14%, down as much as 17% intraday. Following quarterly update, first quarter revenue missed estimates, stock down about 34% year to date. Help us understand, in what has been a very active market year, volatile year, ability where there are some things that have just so outperformed, and yet your stock is down. Why is that? I don't quite understand it.
Well, we've stayed focused on building for the long term. We've grown our assets to more than $99 billion as of the end of May, grown clients to just under 1.5 million clients. We've done that all while navigating a relatively complex investment environment for clients. So as rates fell last year, we saw clients transition from cash management to investing management. We drove cross-product adoption and helped clients invest for the long term while maintaining a really healthy growth in our cash management product as well. And so the combination of those two things is helping us weather a complicated investment environment.
When you talk about the cash management product, you're just talking about a high yield savings account, right?
With liquidity features, we have a money market fund that helps folks that are in high tax states be able to minimize their state tax payments as well.
What help us understand the identity of Wealthfront right now? Because as Carol mentioned, one of the OGs when it comes to this idea of a robo-advisor, but the product has really evolved a lot. And I think some critics might say it has moved away from the roots of like, just set it, forget it, and look at it quarterly. Like you do active trading. I think you can do crypto at this point in there.
Not really doing crypto yet.
Okay, but there's like options to buy individual companies now, which is totally different from what I understand the company started as, which is low-cost index funds, diversified geographically, and the like. That's
still the huge majority of our assets, the majority of our attention, and where we focus on. So even in our single stock trading product, our stock investing product, folks are buying ETFs. in that product, more than they're buying individual equities. And so if you look at the way that our clients invest, they're focused on the long term. Ultimately, what we're trying to build is the best place for responsible investing. And we want to help folks that are in their 20s, 30s, early 40s be able to invest for the long term responsibly.
How are they investing? So, we all kind of laugh in the newsroom, like, just buy the index, because it's increasingly year after year.
Well, also, and that's kind of like all we're allowed to do.
Well, we are,
what
right.
we do for work.
But even in general.
It's a good strategy.
Yeah, no. So, I am curious what you see on the platform. How are people investing? Were people buying a lot of energy names this year because of the war? What were they doing?
We've seen a lot of focus in global diversification as there is complexity in the U.S. markets. Folks want to make sure that their assets are protected. They have some principal protection.
But they're not running away from the U.S.
They're not running away from the U.S. And we've certainly actually seen so we follow investor sentiment very closely.
Yeah.
We do our survey monthly at the end of every month. The end of February, investor sentiment was quite good. End of March, investor sentiment had fallen steeply and quickly. It recovered about halfway in April and recovered fully by the end of May. What we observed is the products that we have are a range of bond products to single stock investing. Throughout that period of a fair amount of volatility and folks' views on the markets changing, the most popular product remained our global diversification investing account. But then we added S&P direct indexing, NASDAQ 100 direct indexing, which allow you to invest in the index but get more benefit from tax loss harvesting.
Just one follow-up. How much does sentiment follow up with an investor making a move? There's sentiment and then there's actually making a different trade or moving assets.
Most of our clients are not changing as a result of sentiment, but you do see some flows on the margin driven by sentiment.
We mentioned 2008. It has Silicon Valley DNA and roots. I'm wondering what you're seeing in terms of portfolio size and assets of clients right now. What's the typical portfolio size? How much assets? Where are the assets that your clients have? There's a New York Times article today that talks about how SpaceX employees, there's about to be 4,000 new millionaires, and more than 100 people from the SpaceX IPO having a net worth of more than $100 million as a result of that IPO. Are you seeing that money come in?
We've seen both companies in private markets that create liquidity opportunities through secondaries or through IPOs ultimately lead to assets flowing onto the platform. We don't get into specifics of how many clients we have that are employees of different firms, but it's always been an area of strength for us to help people invest for the long term, optimize their taxes, and do that with knowledge workers. We have a lot of clients who are employees of all of the different companies that you might hear about. And ultimately, the value that we offer to them is the same value that we offer to a 22-year-old opening their first investment account.
So how big is a typical account?
$70,000 is the average client, but we have accounts as small as $1 and accounts as large as $100 million.
Interesting. All right. Competition. We were talking about this too as we were prepping to talk with you. Robinhood, total assets under custody recently exceeded $320 billion. And they've got about 27.4 million active funded accounts. Schwab, total client assets, 12.6 trillion as of 1 month ago. And they talked about total client accounts of 39.1 million. They've also got reported active brokerage accounts. That was actually 39.1. Total client accounts, 47.2. Wealthfront on earnings last week, funded accounts 1.46 million, grew 15% year over year. Funded accounts of 1.9 million also grew 15% year over year. And you talked about, I think, 99 billion in assets on the platform. Who is your competition? Who do you see as your biggest competitor in this space? Because it increasingly is growing. The big guys now maybe ignored you guys initially, but they have actively gotten in. I'm just curious. Who do you see?
The number one practical competitor that we see is underconsumption of financial services or underconsumption of investment. So folks are coming to us. They're doing something that is a shorter term investment or is a more speculative style investment. And ultimately, they're graduating to a diversified managed portfolio. They're looking for more tax efficiency if they've seen the impact of even gains in individual stock trading leading to negative outcomes. Most of our clients that are coming on new to the platform are in their mid-20s. is the average. So folks are getting started early, and they're moving away from products that, our clients are professionals. They work a job. They don't have time to day trade every day. And so they're looking for someone to manage their assets for them. And that's what we do.
Is there an average age? I'm just curious, or what's the
average age on the platform is around 35,
okay.
But average new client is around 25.
So younger. That's interesting. And they're working, it's not inherited money, or it's a combination of both?
I think that one of the things that is underappreciated is there is a pool of the millennial and Gen Z generation that's very actively earning and saving. So our clients tend to be anyone who is earning more than they spend in a given month. And so whether they're starting by saving a few dollars or saving tens of thousands or hundreds of thousands of dollars a month, we offer great solutions for all of those clients.
Interesting.
We're all over this SpaceX IPO, expected to start trading on Friday. Curious about access to SpaceX, if it is included in indexes at some point in the future, how you would allow your users who don't want access to SpaceX if it isn't an index. It's funny. This is it's a very polarizing thing.
Yeah, it's interesting.
Right now, there are folks who are like, I want a piece of this, I want in on it, and there are folks who are like, I don't want to touch it. How do you do that on the platform?
So we don't do IPOs. In general, we advise clients that it's probably not in their long-term interest to participate in IPOs. There's a lot of volatility around IPOs, as we discussed earlier. What we have said is most of our clients can participate in direct indexing. That gives a fair amount of flexibility in portfolio construction and what we can do.
So explain what that is for people who aren't familiar, buying the S&P 500 versus direct indexing.
So we'll buy the underlying holdings of the index.
Rather than an ETF.
And then we'll manage the allocation of those individual securities to match index performance while also being able to take advantage of tax loss harvesting opportunities, selling losers, replacing them with correlated stocks.
So it's even more efficient than tax loss harvesting within an index.
It is. There's more opportunity and more volatility inside of an index.
So then would that allow you to essentially say to a customer, a client of Wealthfront, you can own the whole S&P 500. Let's say at one point SpaceX does become part of it. But if you want to remove SpaceX from that allocation,
that's a feature we've had for more than 10 years.
You can do that. Okay.
So you can pick and choose.
Yeah. I mean, if you try to exclude half of the index, then it's less likely to work.
Do people take you up on that?
That makes sense.
Clients are active in adding stocks. I would say there's a population of people that are very excited about SpaceX being part of the index in the future, and there's a group of people that are skeptical of SpaceX being part of the index and want to exclude it.
David, how are you guys using AI?
We've always been a digital-first financial advisor. And so when you look at what a financial advisor does, they're basically a natural language interface on top of some software tool that's helping them think about and plan the financial future for their clients. So the opportunity that we see is to use the financial tools that we've built, the financial planning tools and all of the investment tools that we've built, to be able to do intake and understand our clients and then invest for their futures.
Are you worried, though, about AI kind of basically doing what you guys do?
I don't think we're worried about it. I think we're excited about the opportunity.
It's more of an opportunity than a risk?
I mean...
Go ahead.
No, I didn't.
I think it's an opportunity. I think that we're a technology company at heart. More than half of our employees are software engineers. We've been building all of the tools necessary to be able to help folks invest for the long term, understand them very deeply. And what I see ultimately is we're the lowest cost producer in the space. We have the lowest cost to deliver our investment solutions to clients, which I think creates an amazing opportunity for additional automation and advice.
All right, just come back because we want to do this over again. This was fun.
Thank you.
David Fortunato, he's CEO and president of Wealthfront Corporation, joining us. When we come back, standing by your lawyer. That's what the Goldman CEO is doing. That's next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ very much in the red. Geopolitical tensions, one major source of concern. Also, Wall Street's getting rattled by a renewed sell-off in some of the world's largest tech companies. Right now, the NASDAQ 100 index is down 1.6%. The NASDAQ Composite Index is down 1.5%, with the SOX, the Philadelphia Stock Exchange Semiconductor Index, now down by almost 3%. S&P 500 index down 88. That is a drop of 1.2%. A lot of red today with the Dow down 1.4%, down 725 points. And to be sure, the S&P 500 index right around session lows. Again, NASDAQ 100 down 1.5%. The SOX down 2.85%. And the 10-year currently yielding 4.53%. The 2-year 4.12%. The 30-year 5.02%. Gold is down $150 the ounce to $41.08. That is a drop of 3.6%. Geopolitical tensions sending oil higher. West Texas Intermediate crude up 2.2%, 90.17 a barrel. Brent crude 93.24 barrel of Brent, up now by 2%. Oracle's report after the close of trading represents the next test for AI stocks after a disappointing forecast from Broadcom. Company's revenue growth has jumped due to a push into cloud services amid soaring demand for AI computing. But that transition has been costly and turned its free cash flow negative. Ahead of earnings, Oracle down 0.7%. Recapping, S&P down 1.2%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Carol and Tim, that is a Bloomberg Business Flash.
All right, let's get to it because we got a lot to do with the dynamic duo that is up on set with us. All right, this is, first of all, one of the most read stories on the Bloomberg today. Goldman Sachs CEO facing fresh scrutiny over his decision to stand by the bank's top lawyer after the U.S. Justice Department released years of her emails with disgraced financier Jeffrey Epstein. So we're going to start there, and there's other stuff to get to when it comes to big banks. With what you need to know, we have Bloomberg News banking reporter Todd Gillespie and Sri Natarajan, Bloomberg News chief Wall Street correspondent, right here in studio. All right, great reporting. I don't know who wants to kick it off, but first of all, remind us who this lawyer is at Goldman and the Epstein connection. Sri, do you want to start, or Todd?
Sure. I mean,
Yeah.
Kathryn Ruemmler is the general counsel at Goldman Sachs, has been in that role for a few years now, but really been in the news for the last several months, especially since the DOJ disclosure of the Epstein files, which showed that Ruemmler appeared to be one of Jeffrey Epstein's closest associates, at least in terms of the volume of emails exchanged with Epstein. Then, with all that mounting scrutiny in February, Ruemmler actually submitted her resignation, and at the time, the CEO of Goldman Sachs, David Solomon, said he reluctantly accepts the resignation and she will be missed at the firm.
To be fair, close association, lots of emails doesn't necessarily mean any wrongdoing.
100%. And that's why I was being clear that it was the volume of emails and sort of the exchange was there. But she's always maintained that she was friendly with him in a professional context. She was a lawyer at a white-collar law firm at that time. So she is a defense lawyer, and he was sending prospective business contacts her way. But this latest development where after that February resignation, now we're reporting that the CEO has asked her to stay on at the firm in some capacity, even if not general counsel, is it goes against the grain of everything we've seen Epstein related in the last several months, where anyone who has been under scrutiny has been forced out of their roles, fairly or unfairly, but that has been the case in most of those other circumstances. So this at least goes against that for now.
It goes against that for now, and we're going to get to more of that in a second. But Todd Gillespie, I want to bring you in and just remind us, because we spoke to you about this a few months ago, about the content of the exchanges in that we did find and that you and the team found in the Epstein files and sort of the nature of their relationship.
Yeah, well, I mean, it's been extensively reported, a lot of the interactions that they've had. I mean, she accepted thousands of dollars in gifts from him. She advised him in a number of contentious media and legal scenarios, informally, obviously, at the time. She wasn't, the Latham and Watkins, who Kathy worked for at the time, has said that Epstein was never a client of the firm. So it was seemingly done in a sort of an informal capacity here. But the volume, as Sridhar says, the volume of these interactions, they talk about everything from, they make jokes about fat people at the New Jersey Turnpike, to talking about, food and, things that they see in the news and, also, more intimate legal questions as well.
And the time period was after it was well known that...
Yeah, so I mean, Epstein was convicted, back in 2008, I think, for soliciting sex from a minor. This was well after this period. This was around, the 5 years or so before she joined Goldman Sachs, and before Epstein died in 2019. So this was before her time at the firm, and obviously, this predated her time at the firm, and the firm has said that she fully disclosed her interactions with him and that they've been satisfied by that as well.
What is Goldman saying about all of this? this in terms of why David Solomon wants to keep her on for a certain time as an advisor?
Well, I believe the company has declined to comment when we spoke to them.
So nothing publicly, but we have reported that David Solomon has privately and very strongly maintained that he doesn't think Ruemmler did anything inappropriate or wrong. And you also have to remember, David Solomon has been CEO of Goldman Sachs since 2018. He's gone through his own bout of intense scrutiny over his leadership style. And if there's one thing that we know about his style, is that he doesn't like being told that he's wrong. He doesn't like when people push back hard against him on certain things. And in this case, I think he feels the right thing here to do is to stick with Ruemmler, even if it's in an advisory capacity, because I think it's a genuine feeling when he expresses the fact that he truly values her advice.
I got to say, go ahead, please.
Well, the other thing just to bear in mind is right now the firm is doing better than it ever has. I mean, its stock just passed $1,000 for the first time ever. David really has his hands very firmly on the steering wheel of this company. And, you really get the sense that no one really wants to question him all that much.
But it doesn't mean that there hasn't been pushback from some senior partners, as you guys mentioned in the piece.
Oh, 100%. In fact, there was a report today in the Financial Times that talks about one of the top partners at Goldman Sachs who left recently having clashed over this very matter with the senior leadership rungs of the firm. So, yes, I mean, even in the last several months when we've reported about this focus on Kathryn Ruemmler and Jeffrey Epstein and all those emails, there has been a lot of hand-wringing inside Goldman Sachs. But again, this is clearly a very top-down firm. This is a place where David Solomon is firmly in charge. And when he truly believes that he's in the right, it's not going to be easy to change his mind. And that's why, and perhaps it's a good show of loyalty, but he's sticking by his decision.
All right, while we've got you, a couple of other things we want to quickly get to. Citibank. President Trump turned into an M&A enthusiast. Surprise shout out for Citigroup CEO Jane Fraser, excuse me. The president putting out on social, he said, wow, Citi was ranked #1 in topping M&A advisory market by value in Q1. He did this post this morning. He went on to say, congratulations to Jane F. and all of her great people. They've worked very hard. Really big comeback for Citi. Citi shares are down. I got to say the big banks are kind of some are up, some are down. Is he right? Is Jane Fraser doing a good job?
Well, Cara, I mean, I think Jane Fraser I think most investors would say she's doing a pretty good job at running the bank. I mean, the stock price was up more than any other big US bank last year. She had an investor day that was pretty well received just in May. So yes, broadly, the sentiment of what Donald Trump is saying might be true to many investors.
But is it #1 in M&A?
But it is absolutely not #1 in M&A. And that's one thing that, maybe
not
Trump needs
list?
to...
Not any list?
Not Bloomberg deals list, not Dealogic. None of the league tables put it at #1, but they are, by some counts, #1 in power sector advisory M&A, which is what came up on Fox Business this morning on a banner across the screen, which might have something to do with Trump's post on Truth Social, because Leon Golvaria, top banker at Citi, was being interviewed on Maria Bartiromo's show this morning, which might have something to do with it.
Yeah, let's be clear. Sure, they're also #1 in every merger and acquisition deal announced between 1 p.m. and 3 p.m. on the third Tuesday of every month. That doesn't mean that they're the #1 M&A advisory bank in the world, and that is exactly what the president said. It's a shame we never had President Obama tweeting about league tables. And it is funny when President Trump tweets about stuff like this, because he has tweeted about bank CEOs in the past. But nothing that matches this tone.
Well, that's what's crazy. Hey, 20 seconds left, though. You did some reporting, Todd, back in October. Is President Trump banking with Citi? Just quickly.
Well, we know Eric Trump is banking with Citi and that he has taken some of his father's money and put it in a trust at Citigroup. That hasn't been publicly disclosed. And at the time, the Trump General Counsel said there was no new trust in our story. But yes, there are signs indeed that Citi, more than any other bank, really has got itself in somewhat closer proximity to the president.
We're not done. Don't go. Todd Gillespie and, of course, Sri Natarajan of Bloomberg News.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
All right, folks, we're getting ready for the last hour of trade on this Wednesday. Carol Massar, Tim Stenivek, live here at Bloomberg headquarters in New York City. We've got stocks hovering near their lows of the session. So what does that mean? We're down about 1.3% on the S&P 500, a decline of 95 points. Dow Jones Industrial Average, it is off 735 points, down about 1.5%. NASDAQ 100, again, those tech names really the laggard when it comes to the trade today. Down 1.7%, Tim, that's a decline of about 492 points. You look at the S&P, most names in that index are lower, more than 300.
Yeah, interestingly enough, industrials down 3%, consumer discretionary is down 2%, materials down 2%, and information technology down 1.8%. In terms of what's moving, on a percentage basis, super microcomputer shares taking a hit, down more than 22%. Generac down 7.8%. FedEx Freight down 7.1%. But look, you have energy stocks higher in the S&P. Devon Energy up 6%. Yeah. And I don't know if this is one of your gainers today, Carol.
What?
Casey's General Store.
It is actually.
Okay.
They're kind of quirky.
I won't give it away. Up more than 18%.
And listen, energy names up again because of, again, the tensions over in the Middle East. We continue to see that play out as it seems like no end in sight. And we've seen the U.S., I don't want to use the word escalation, but they are continuing some attacks.
Well, it's definitely not a ceasefire, as we heard from Chris Kennedy earlier.
And the president says, essentially more attacks, right? And continuing it as that situation happens. I've got the IMAP pulled up on my Bloomberg right in front of me. A lot of red here. Tim mentioned energy, certainly outperformer. Consumer staples, they're up about 1.5%. Bottom of the pack, though, industrials down 3%, consumer discretionary down 2%, materials down 2%, information technology down about 1.9%. And the stocks, which has been bouncing around a lot, 27 of the 30 names are lower in today's session, and we're looking at a more than 3% decline in that index. It's down about 3.2% to be exact.
I'm Tim Stanovic along with Carol Masser. Let's take a look at some stocks on the move today. We're joined by Isabel Lee. She's Bloomberg News cross-asset reporter. You had plenty to choose from today.
Plenty, and I made sure to bring the fun ones. So we can start with Cava, ticker CAVA. Stock is up around 6%. That's after UBS raised the recommendation on the fast casual chain to buy from neutral. The analysts there said that they see solid same-store sales outperformance versus peers, even amid this tough macro backdrop. And they also said that the catalyst is to sustain that momentum over the longer term. I feel like Cava is one of those people love to go to over lunch. I've only brought lunch from there once. Exactly.
I've done it when I've been traveling.
That's the only time you can go is at the train station in Washington, D.C. because that's the most convenient one to go to from our office. I did it in
Virginia.
I've tried it once near my home. Yes, it's not far from. It's far from here. That's why I don't think a lot of Bloomberg people have tried.
37% year to date.
And the price target, they raised $290 from $85. That's around an 18% increase. And it has 18 buys, 11 holds, and just one sell. So looking good for Cava.
Yeah.
This is a company that has been all over the place, though. Like if you go back.
Yeah.
Exactly.
Yeah. If you go back to like when this company IPO'd, this was a stock that in 2024 was over $150 a share.
Oh, so wow.
So
kind of almost half that right now. All right. I don't know. We keep doing companies, I feel like, over the last week, food related, because it always makes me hungry. Let's go to Cracker Barrel.
Ticker CBRL. They're having a great day. Stock is up almost 27%. They boosted a revenue guidance for the full year. It also beat average estimates. And this prompted Wells Fargo to raise recommendation to the stock to overweight. And guess what's helping?
What?
Whimsical salt and pepper shakers and just Americana merchandise.
All about that 250-year anniversary.
Yes, exactly. So they have a line, American Heritage. It includes shirt decked out in eagles and fireworks and salt and pepper shakers, like mini drills, baseball hats, and a former U.S. president. So that's really helping them. And remember, they received a lot of backlash last year after they tried to make their logo more modern.
They got rid of the old timer.
Who would have thought that people don't like modern?
Don't forget about the old timer. That's what we learned.
Yeah, don't forget the old.
Cracker Barrel debacle of
play around with logos and stuff. People get a little persnickety.
Some people get really attached. You just don't. It could work, but it could also backfire, and you really just will never know unless you try. I guess with adequate market research, not implying they didn't not do market research, but so the company has been focused on doing improving its service in food by bringing back classics like country ham. Do you eat country ham?
I don't think I've had country ham. What is country ham?
Ham that's from the country, maybe?
Okay. I don't know. I don't think I've had country ham.
I'm kidding. I don't know.
I don't.
Carol, what's country ham?
I'm not quite sure.
Paul Sweeney eats it. He was talking about the country ham. He had the, he had
if you make Eggs Benedict, you get a nice little piece of ham on, know. So like, I'm not quite sure if that's country ham. There's like different types of ham.
I thought that was Canadian bacon.
Is it Canadian bacon? I don't know. All right. We're moving on. I'm not going to say the next company
Talia told us country ham is dry cured smoked pork.
Oh, thank you.
Traditional to the southern United States. Thank you, Talia.
Does it go in Eggs Benedict?
Probably.
Tick, 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 tick.
If they open anything.
Message us,
What's
IBS,
next?
and let us know. I don't know how to say this name, so I'm not going to say it.
Please, I was hoping you would say, but it's Parabilis,
Okay.
I think, medicine. The ticker is PBLS. All that matters is its trading debut, and it popped 60%. That's after the company raised $745 million in an upsize IPO, price above its marketed range, and a private placement. So this is a clinical stage cancer drug developer. They opened their shares at around $33.35 each, which is again above the IPO price. So it's looking like really a great day for them. The IPO attracted demand for about 10 times the available shares prior to Tuesday's upsize.
Good stuff. Check out our Stock Movers podcast. Find it on Apple, Spotify, or anywhere you get your podcast. Isabel Lee, thank you so much. If you're watching on TV, the close is coming your way. Tim and I continue on Bloomberg Businessweek Daily.